All right, are we going to see a housing correction or a housing crash? Watch this video, that way you have information that you're not going to be able to find anywhere else to be able to assess what's actually going to take place potentially in the housing market as well as the economy. That's what we're going to go over in this video. Now, right here, we see that the 10-year Treasury ticks lower because Fed's Waller advocates for a July cut. So now we have somebody from the Federal Reserve saying we need to cut interest rates, the Fed rate, in July. And the markets are pricing it in September, and that's why these interest rates are staying elevated around that 7%, maybe the upper sixes. And then another article comes out stating another treasury. So treasury yields fall as crude oil retreats. And of course, we have the war going on with Israel and Iran. Wars are going to most likely cause interest rates to come down because money spending. So if the U.S. gets involved in a war, that could potentially lower interest rates because money needs to be printed, stimulate the economy, and interest rates need to come down to fund those wars. Now, if we take a look here, there was another Fed governor floats the idea of a July rate cut. And if we come down here, we see that Michelle Baumann is in favor of July cuts. Now, if we take a look at these other articles over here, we see that home sellers now outnumber buyers by the largest margin in 12 years. And we see that the U.S. housing market has nearly 500,000 more sellers than buyers, the most on record. And this will most likely cause home prices to fall. Now, their record goes back to 2013. So again, I've covered this in the previous video. This doesn't mean back in 2008, 2009, just means since 2013. And if we take a look at some of these additional articles, right, we'll go through a lot of this stuff. And we see that the inventory over here is continuing to increase, or it's still, that gap is still staying there. So we're seeing that this is happening with active listings hitting back to 2016 levels. Now here in Utah, and we are one of the states where we have more inventory than pre-pandemic, and more states are following. Now all of this is indicating that the market is most likely going to continue seeing a correction. Now the other big thing to keep an eye out on, and this is also indicating a correction. Now I'm going to show you what's indicating a potential crash. And I did put out a video back in 2022, in June of 2022. I covered the market correction and the market crash potentials. And there is a lot in those videos. Those were made in June of 2022. And that materialized itself in the second half of 2022. And that's why I started making these videos, is this is the information that I was sharing with people that I was doing business with. And I said, hey, let me go ahead and put this on YouTube. That way more people have access to this information. Now this right here is also indicating a housing correction, the builder confidence. So if we take a look right here, builder confidence in May fell sharply, and it's marking its lowest level since November of 2023 and almost reaching those lows of December of 2022. Now, why is this important to keep an eye on? Well, builder confidence in the later months of the year is essentially, we peaked in May of 2022. Then we saw those 9 months of consecutive price drops. And the median home price fell about 15% in those 9 months. And then in the spring, we saw an uptick, and in the second half, so ever since 2022, we see an uptick in the spring, and we see a downwards pull in the second half. And in 23, 24, and here in 2025, we've never reached those peaks of May of 2022. And now we are in a downward trend here going into the second half of 2025. Well, the big thing is these builders right here, they're saying November of 2023, and they're saying December of 2022. Well, that's the holiday season. That's the end of the year. That's winter. And if they're pessimistic and not feeling good about the housing market in May, which is the spring selling season, that is indicating corrections and price drops. And we see Redfin, right? We see that Zillow is coming out. This will most likely cause home prices to fall. So if Zillow and Redfin, who are always more on the optimistic side, and they're selling leads to real estate agents, so they really benefit from a really good market, a real estate market, because the more transactions that are being done, the more money that they make with their data, with selling their leads, and everything else in between. So if we take a look at that, we see now that Redfin and Zillow are both projecting price drops in the second half. And they're usually always optimistic, saying, oh, the market will grow, the market will grow. And this is all the news that we see from these big juggernauts that benefit from a good housing market. Now, all of this is indicating price drops, right? I mean, it's going to indicate those corrections. And if we see price drops in the second half, well, the biggest thing, again, is this builder confidence. If they're not confident in the spring housing market, we probably have a pretty good chance of their builder confidence dropping below these levels in November of 2023 and December of 2022, which means the builders are, and I'm seeing this already here as we're tapering off from the spring season, entering summer, right? Builders are starting to offer more incentives, price drops, and I'm actually getting alerts. Hey, we're making price adjustments in our community. So that's already happening, which is supposed to be the strongest time for the seller market. And that hasn't materialized itself this year, especially here in Utah. And it's been something that's going on nationwide where the seller's market just hasn't been strong. All of that's indicating a correction and price drops falling here in the second half substantially. Now, could we see price drops dropping upwards of 15% like we did in that second half of 2022? Maybe, maybe not. But if we see 10% or 8%, we're going to have those lows that we had in December of 2022 and January of 2023. So these good deals are going to start coming if this data holds true, if this inventory keeps piling up, and we don't see that this is going to be stopping itself. I'm probably going to have to reboot this computer here. It's not wanting to pull some stuff up. Here we go. So we're seeing this active, and then we're seeing these active listings again. So look at this purple blue line. Look how much more homes are up for sale than in the years past, all indicating that this trend will most likely continue with these price drops. And right here, if we take a look, you see that these under contracts now are starting to drop in this blue purple line as well for 2025, holding the trend of all of the years except 2021, which held strong, this green line of under contracts continuing to maintain itself. And this is the pandemic. I mean, we had way too many homes under contract, way too much demand, interest rates dropping low, and just everybody was fearful that they'll never be able to buy a home. Well, we see that the second half here, we see that the under contracts continue declining, and that trend has happened here this year as well. So we know that these under contracts are going to keep increasing, and we see that we have a couple more months of inventory growth left. We hit 13,500 last week. Actives on the MLS, we're probably going to hit this week 13,700. So sometime in July, we probably will have 14,000 active homes for sale, which is just crazy. I mean, look at this. We've not had that here in recent past. I mean, I'm going to have to create another video. We have to go back all the way to 2016 to have more inventory. So I'm going to do this again. I'm going to go back to see which year. Would it be 2017, 2016, 2015, 2014? Where would we have to go back to have that inventory? And now I'm going to show you guys some stuff that could lead to a housing crash. Now, one thing that we would need to happen is we need the government to stop bailing everybody out. This right here is indicating again of a housing correction and not a housing crash. The Trump administration extended the foreclosures into September 30th of 2025. So unless we see something in the economy, unless we see forced selling, it's really hard to see a full-out housing crash. Most likely, it's not going to happen in 2025, and if we do have a housing crash, that's probably going to materialize itself in 2026 if they don't keep kicking this can down the road and keep protecting these foreclosures. So that's rule number one. Now, before we get into the housing crash aspect of it, make sure you sign up. The link will be down below. I send this email out showing the inventory growth year over year. I'm also breaking it down in different counties, different areas, right? The Salt Lake metro area of the Wasatch Front, Salt Lake County, Utah, Davis, Tooele, and then of course the Wasatch back with Park City, Morgan County with the Wasatch County there. We have Box Elder, we have the Logan area, we have St. George here, Washington County. So all of these will be broken down for you. So make sure that you sign up for that link down below. That way you're up to date of what inventory is doing. You're able to track the market you're interested in. And then when you do need a realtor, hey, Dinko the Realtor has your back. My contact information is down below. And don't forget to smash that like button, hit the subscribe button. It helps you stay up to date with what's going on, helps me grow the YouTube channel. So I really would appreciate that. Now, here's the stuff about the crashes, and I've covered this in some previous videos, but this right here is a big one, and I'm gonna have to reload this article. There's a ad going on there. All right, let's see here. There we go. more than 400 companies haven't been able to raise any new money since 2021. So this right here is going about the tech industry. And the tech industry we know is not in a good spot. Now this is very, very key to pay attention to. This could lead to that big housing crash potential. And you need to see pain in the economy, forced selling, foreclosures. You need to just see havoc everywhere, unfortunately. And so right here, we see that we're not able to in 2021. Well, if they weren't able to raise money in 2021 with lower interest rates, they're having a much harder time right now, and we know that. Now, if we take a look here, meanwhile, nearly 95% of all tech startups worth more than $1 billion aren't able to generate a profit. Well, if this is going based off of 2021 data, with lower interest rates, how are these companies going to be able to generate a profit where interest rates are double, triple what they were back then? And I've been saying this, majority of these companies were made and became companies after the Great Recession, after 2008, 2009, after the dot-com bubble of 2000, where we had the stock market reset itself. Now, we didn't have a tech bubble in 2008, 2009 during the Great Housing or the Great Recession because people were wary of tech because of the dot-com bubble in 2000. Well, we didn't have any tech bubbles here recently. So all of these companies have come into existence after the 08-09 housing crash. They weren't able to generate a profit during the booming teens, during the booming pandemic. How are they going to be able to generate a profit if we see a recession? The majority of these companies have never been through a recession. That is going to be key. And now we have AI wreaking havoc on the tech industry. We could see some Armageddon type of stuff happening in the tech industry. That's one thing to pay attention to, because that definitely can cause a housing crash. Now, right here, if we take a look at what's going on with commercial real estate maturity wall, 950 billion in 2024 and to peak in 2027. Now, they kicked that can, and I'll explain this a little bit further. They kicked that can of 2024 into the end of 2025. Again, they keep kicking this can down the road. This is why we're not seeing things in the economy. Unemployment just skyrocket, even though the Fed came out saying that they think unemployment is going to tick higher than what they were actually anticipating, that the labor market's going to soften. And if you have a job, you're good. But if we see layoffs in big numbers, the jobs are just not being created there, and unemployment could spike rapidly. So if you take into account commercial real estate, if you take into account the tech industry, if you take into account what's going on with the car industry over here, that all could wreak havoc on the economy. And you would have to have pain in the economy in order to have that housing crash. And right here, we see people owe more money than ever on upside down car loans. Now you see that there is actually a lot more issues going on right now than in 2008, 2009. However, you also have much more money printing going on, much more can kicking, much more bailouts, just suspending things, not letting the free market work itself. We're supposed to be a capitalist free market, and that's just not the case anymore at all. I mean, it never was. There was always manipulation, but the manipulation of the free market right now is disastrous. We absolutely don't have a free market. Now, back to this commercial real estate. Right here, these are loans that are coming due. Commercial real estate doesn't have 30-year mortgages like when you go out and buy a house. So what they do is they have 3 to 5 year loans, and then they have to refinance them or pay that debt off. So they're continuously refinancing these commercial loans. Well, they're supposed to refinance them as values have dropped and as interest rates have substantially increased, and is causing an issue. That's why they're kicking the can down the road, because they're saying that this would be just as bad, if not worse, than 2008, 2009 for the commercial industry. JP Morgan, Goldman Sachs have come out, I've shared these articles in the past, and this hasn't materialized itself. We're also seeing that this hasn't materialized itself with foreclosures that are supposed to be hitting the market. They keep getting prevented and keep getting extended by both of the administrations. This is why I hate politics. I don't trust any of them. And it seems that every year the politicians just get worse, and worse, and they make more and more money. Now, back to what's happening over here. So again, these are the things that you would have, just some of the things that you would have to see in order for the housing crash to happen. Now, the housing correction in itself doesn't need the economy crashing itself. We're just seeing the builder confidence going down. We're seeing interest rates still staying high. We're seeing that sellers are outnumbering buyers by the largest margin. All of this, and especially with upticks in unemployment that the Fed is projecting that's going to be a little bit worse than what they were initially anticipating, is all indicating for corrections to continue happening as the year progresses. Now, if you want to get the best deal of the year, you don't want to buy too soon. I said, starting in July would be the first month that you want to enter the housing market, and July is coming up. However, the best deals come when the school year starts, because a lot of the buyers don't want to move, kids are back to school, and that's when you're able to take advantage of the housing market. Sellers need to put their house on the market ASAP. Buyers have much more leverage now, and if time is on your side, you can take advantage of that. And as the year progresses, as we get into the holiday season, the deals potentially are going to be even better and better. The only thing is the trade-off is the houses that you're buying in November and December are going to most likely need a little bit more work, a little bit more touch-ups. So if you're willing to put in the work and you just want the best deal, you kind of wait for the year to progress. Make sure you subscribe, make sure you're watching what's going on. That way you have the information as things are unfolding in the economy, in the housing market. Now, if you want something that's more move-in ready, then you want to probably enter the housing market sometime towards the end of summer and sometime at the beginning of the fall. That way you have more of those move-in ready homes that have the granite, the quartz. You're not really going to need to do any touch-ups, and you just are able to move in. So depending what you're trying to accomplish. And of course, when you do need a realtor, no one has your back like Dinko the Realtor. My contact information is down below in the description. Make sure you get a hold of me. And again, that link to sign up for this email will be down below as well. That way you're able to stay up to date with what's going on in the economy, because nobody has your back like Dinko the Realtor. Smash that like button, smash that subscribe button, and make sure you're watching these videos, because this information is going to keep coming.